Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to make a full breakdown of the situation that we currently have on EURUSD because we do have quite interesting price action and structure. Starting here from the monthly time frame, in fact, what we can notice is that lately we have seen a very strong push to the downside. However, during this push, we did see multiple corrections. We had a lot of impulses, correction, impulse, correction, impulse, correction. At the moment, we just had another impulse, after which we haven't seen a retracement yet. Therefore, there is definitely the possibility for the market to create a short-term rejection to the upside. So by looking at the monthly, the market would seem a little bit overextended to the downside and in need of a short-term correction. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the market has been printing quite predictable patterns. First, we had the creation of this M pattern here, which is an overextended M pattern, after which we wanted to see a correction. The market created that. After the correction, we wanted to see the continuation lower. Once again, the market made the move. However, in creating this move to the downside, the market has also printed now an M pattern. And in general, after the creation of an M pattern, what you would like to see is for the market to create a rejection to the upside and go and complete the pattern at the previous support turned resistance. That is what the market likes to do most of the times, create a nice move to the upside to complete the pattern at the neckline of the M pattern itself, which in this case is currently lining up exactly at this area, which is the zone that we expect the market to go and test. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see how this area is currently holding as support. The market tested it multiple times, rejected it to the upside every single time, but as we are testing the previous low, at this point, we could expect a potential rejection to the upside for the market to complete the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see that with the last reports, net positions have been dropping. We went from having minus 34k net positions, now we have minus 47.6k net positions. However, it is important to point out that after many reports in a row where we were having tens of thousands of shorts getting added, this is the first time that shorts are starting to get closed. We still don't see longs added, but shorts are starting to get closed, meaning that from an institutional perspective, they're not really interested in the short anymore. So what might happen at this point is that we do get an accumulation of longs inside of this area, which at that point would be reflected with the new report that is coming out this week. And at that point, we could expect a rejection to the upside. So here in the daily time frame, what would be very interesting for that is if we actually get a break below the support and a break back above, confirming it as a fake breakout. And then we could expect a potential rejection to the upside, or the market could just break to the upside. If obviously it is to complete the pattern. If the market just breaks, retests and continues lower, then simply there is no setup in this specific case, because at that point, this previous support would become resistance. And unless it gets broken once again to the upside, we will not have daily bullish structure. So if everything here will start to shift back to the bullish side, how we could be looking for this potential move to the upside and completion of the pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market, at that point, we could be adding EURUSD on our watch list. And if the market would provide to us one of our valid entries, at that point, we could be looking for a potential rejection to the upside and for the completion of the pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to access one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a promotion in which you have the possibility to gain access for only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you have the possibility to get a refund credited back in your trading account. And if you scroll lower, you will see that you have the possibility to gain access here and join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.